The Dow Jones jumps 250 points today on Monday, July 15th, and the S&P 500 rises to a new all-time high. Are the markets pricing in a higher chance of a Trump victory following the unfortunate and tragic attempted assassination of Donald Trump over the weekend? We're going to find out with the next guest, who has assigned a high chance of a Trump victory all along, even before the events of this past weekend. He is Marko Papic. He is the chief strategist of BCA Research's new service called GeoMacro. And we're going to be talking about his updated macro views and his outlook for the economy and for geopolitical situations all around the world, including the U.S. domestic political situation. Marko was previously the senior vice president and chief strategist of BCA Research's Geopolitical Strategy before moving on to Clock Tower. And he was also a former senior analyst at Stratfor. Now, for those of you who are new here, please subscribe, hit the bell button to get notifications, and also subscribe to my upcoming newsletter, which will be released this week. More than 1,000 people have already signed up. It's completely free, so thank you very much. I've also gotten pledges from people totaling more than $1,000 already. I'm going to keep it free for now, so thank you for your pledges, but you will need it. This is because I want to just keep it as a summary of my current videos in case you don't have time to watch the entire video or all my videos over the week. You can get a summary recap in print form. Plus, I'll be adding my own analysis, and we'll be giving the recap of the top news of the week and also news to watch for the following week. So it'll be just a print format of my video interviews. It'll be very informative, so subscribe to that. Marko, welcome to the show. Thank you very much for being here today.
Great to be here, David. Thank you.
Marko, well, congratulations on your new product. We'll talk a little bit about your macro views, which basically summarizes the themes of this particular new product. I want to talk about first U.S. domestic politics and then some of the geopolitical themes in your new book, or your book that came out recently, Geopolitical Alpha. So the question in everybody's mind following the unfortunate attempted assassination of Donald Trump over the weekend, people are wondering whether or not this has affected swing voters and perhaps even lured some Democrats over to the Republican side. Certainly, it's bolstered some of the sentiment from the Republicans already, but what we're wondering is whether or not this has boosted popularity of Trump across the political spectrum. What's your take?
Yeah, I think that's not necessarily what something like this would do. I think this is more beneficial for increasing the turnout, if you will, on the Republican side. So if you were on the fence, if you were a conservative voter and you were on the fence, I think now after this, you might be very much motivated to join the election, to get off the couch, if you will. You know, there's the old political adage that there's really always three candidates: the Democratic one, the Republican, and the couch. And the couch quite often gets quite a lot of votes. So again, if you're a conservative or a center-right voter, I think that after something like this, this unfortunate incident, you're going to be motivated to join the election. And so the turnout for the center-right candidate, that's obviously Trump, should be quite good after this.
It was compared to the attempted assassination of Reagan in 1981, after which it's been reported that, this particular article from Fortune called it politically untouchable and a mythic figure following that incident. Any similarities at all to what happened in the early 80s?
Well, I mean, it's not just Reagan. There are many other assassination attempts that have happened over the last, 50 years. Usually there is somewhat of a sympathy vote, like a natural human reaction for another human who almost died doing their job. And so I think that that's something just to keep in mind. That's why the probability of President Trump in the betting markets has started to approach 70%. And by the way, David, I think a lot of analysts out there were very reticent to say that Trump was a front runner. In my view, he's always been at around 60 to 70% probability of winning. And so an incident like this allows a lot of analysts in the ether to sort of adjust their views to the reality. Post-debate, that didn't happen for some reason. And I assume that it didn't happen because too many people still believe that if only the Democrats were to replace Biden, they would become competitive. And I don't think that's the case. I think if they replace Biden, with 4 months to go, 3.5 months to go to the election, It's sort of like a Fed cutting rates 300 basis points. You're not bullish. You're not bullish if the Fed suddenly shows up and says, "Oh, intra-meeting, we're going to cut rates." It's usually a sign that something is wrong. Similarly, if the Democrats change the candidate, I don't think it's a sign that Trump is more vulnerable. So the assassination attempt as an event, it catalyzes a shift across the spectrum in the media, in the political analyst community. It catalyzes the shift that finally realizes that Donald Trump is now the front runner. And I think that's what's important. It's not so much about what it does to the voters, although I agree with the consensus. It will probably increase some support for the Republicans and Donald Trump.
Before we continue with the interview, let me tell you about how your privacy is being breached. Do you know how much of your personal information is on the internet? Data brokers collect and sell your personal data, exposing you to risks like identity theft and harassment. But there is a solution. Today's sponsor, Delete Me, is a service that removes your personal information from hundreds of data broker websites. Using Delete Me is quite simple. Just submit your personal information for removal, and their privacy experts will handle the rest. In 7 days, you'll receive a privacy report showing where your data was found and removed. Delete Me continuously monitors and removes your information all year long. Get 20% off of all U.S. consumer plans with Delete Me by going to joindeleteme.com/DavidLin and using the promo code DavidLin at checkout. You can also scan the QR code on the screen here directly from your phone. Join the thousands who trust Delete Me to keep their data private. Get Delete Me today and start taking control of your online privacy. What do you think would be what the Democrats' response to not just this incident over the weekend, but Biden losing in some polls, Biden losing in the betting markets? The Democratic National Convention is coming up. I think one of the biggest questions is whether or not he will remain the choice candidate for the Democrats. What's your take?
Yeah, I think obviously the convention is the key. I think this incident does offer President Biden the opportunity to look presidential, whereas the debate did not really do that. It didn't really help him to look coherent. So now President Biden has a chance to go give an address from the Oval Office, look magnanimous, change the Democratic Party in terms of how they attack President Trump. So whether the Democrats replace him, I just don't really care as an analyst. Again, I've set probability of Donald Trump at 60% of winning the election way back in January. So to me, there's no real big need to assess probability of a candidate other than Biden. Whoever the Democrats pick, it's going to be an uphill climb against President Trump, not just because of the assassination attempt, because he's actually a pretty strong candidate, and a large portion of Americans believe that. So that's something that I think the establishment in the media and analysts have just not been willing to voice. Well,
let's talk about your 60% probability that you've assigned way back earlier this year. What do you think is making Trump a perhaps stronger candidate than back in 2020?
I think what's making him a stronger candidate is the fact that the American public is still not, American public is still relatively unsettled. Despite the fact that the economy is very strong, they find the incumbent party, they don't really support it. And so they're looking for an anti-establishment candidate still. And I think that just underpins the reality that the U.S., more than any other country in the Western world, is really suffering from these latent effects of income inequality. And the Biden administration hasn't really addressed that in any significant way, other than obviously through stimulus, which has helped. It boosted wages in the first part of the presidency, 2021. Of course, then real wages collapsed due to inflation, but then they came back up as inflation came down. However, the underlying reasons for why Donald Trump won in 2016, those haven't really been addressed over the next 8 years. The other issue is that I think the more that the establishment has tried to, that I also find in client meetings, a lot of people ask me, well, what about his court cases? Will he even be allowed to stand in the election? And there's like a tinge of hope in those questions, David. It's sort of like hopeful that something non-democratic, non-political will ultimately cause Trump to stumble, but it hasn't. And I think that over the last 6 months, what we've seen is that every court case has actually been an opportunity for him to raise more money, which is, kind of interesting and in some way humorous. And so that's what I think it is. He's actually a very, very good candidate. That the more he's been put on trial and more that he's been attacked, the better he has risen after that.
Okay, I want to come back to your outlook on the economy because that affects not just the potential outcome of the election, but also your macro view overall. So let's talk about foreign policy now. How do you think foreign policy would change in the second term of Trump versus a second term Biden presidency?
I think it could potentially be quite dramatic. There are several ways in which the two are really different. First of all, I think Donald Trump would employ a far less ideological foreign policy on most issues. So I think that you will see Donald Trump really observe the rest of the world from a very mercantilist, very sort of what have you done for me lately perspective. In a way, that means a pretty dramatic change in policy towards the war in Ukraine. Not so much that Donald Trump will withdraw support for Ukraine. That's not going to happen. But I do think that the blank check to Kiev will be gone. And so it will force, I think, Ukraine, Kiev, but Europe as well to figure out, to articulate a strategy that's not just let's keep throwing resources at fighting Russia. So I think that there could be a pretty significant shift in that conflict, as is, by the way, the consensus.
Yes, let's talk about that conflict right now. So the 3-day NATO summit just ended on July 11th, with a 32-member alliance agreeing to provide $43 billion in military assistance with transferring F-16 jets to Ukraine. The alliance also called China the decisive enabler in Moscow's war with Kiev. So the question is whether or not this move, from a strategic perspective, for NATO to provide even more assistance right now, is the correct move for the Western allies at this particular point.
Well, I think it's for someone else other than me to judge whether it's correct or not. I can just say that it will not change the reality on the ground. Ultimately, you could argue if the intention of West and NATO is to continue the war, to sort of bleed Russia in an endless conflict, then yes, it is a correct decision by NATO. However, if the intention is to rebuild Ukraine and create it as a bulwark of Western democracy and Western capitalism against, Moscow, then no, I don't think it's correct. I think just throwing another $40 billion, into Ukraine is not going to make a difference unless it's actually used for economic development. F-16s are not going to have any battlefield advantage for the Ukrainians. Ukraine is surrounded by Russian territory, and Russian territory houses one of the most sophisticated air defense systems in the world. So you have to understand, every time the Ukrainians fly that F-16, it is at risk of being shot down by a missile fired from Russia. And it's very difficult for Ukraine to conduct what's called the suppression of enemy air defenses inside Russia. So there's a conundrum for you. You have given Ukrainians a sophisticated air platform, but it's not clear to me that they're going to be able to use it. So a lot of that, to me, is just optics. We're kind of stuck in the West on this line, this kind of consensus view that we just must continue to supply weapons and money for Ukraine. But I think that if he can, really end this endless sort of stream of resources towards a goal that's very difficult to complete. It's very difficult to reconquer those territories, as we've now figured out after 2 years of conflict. So start shifting resources towards development. 10 years, but we're not there yet. So it's not something that's a high conviction view.
Do you agree with the statement that China is a decisive enabler, with the words of NATO leaders, in Russia's war against Ukraine? This is, I believe, the strongest rebuke against Beijing since the start of the war from NATO.
Yes, no, it is. Objectively, it's not true. China is not a decisive enabler. If it was, Russia would have won. It would have given Russia actual military technology, not like adjacent. But I think it is very relevant in that it does show Western unity towards China, which is a step in direction from the last, let's say, 5 years, where there has been some equivocation from Europe. So it does seem that the tensions between the two sides are definitely sharpening. Now, that said, again, with Donald Trump coming in, another dramatic departure from where we have been over the last 4 years is that I do think that Donald Trump is, at the end of the day, mercantilist. Again, as I said, the biggest takeaway for investors is he doesn't pursue foreign policy ideologically. So I do think that he will raise tariffs. He will threaten to do so in China, but with the intention of getting a deal done. And so, in a way, if you think about it that way, Donald Trump could actually reduce tensions with China. Initially, he will increase them, but with the intention of concluding another deal, a phase two, the mythical phase two that he never had a chance to do. Now, that is a diametric difference from the Biden administration. Biden administration has not even offered China some sort of a set of, concessions they can make in order to restart negotiations. There's never been a list of demands given to China from the U.S. side while Biden has been in power. He's not empowered to negotiate with China, and part of the reason is that he's very concerned about the domestic political scene. Can he sell a deal with China to the American public? I don't think Joe Biden can. I think Joe Biden knows he can't. Donald Trump can. He's probably the only person in the United States, only human being in the United States who can get a deal done with China and then sell it as a quote-unquote good deal, or in his case, quote-unquote greatest deal ever, as I'm sure he's going to try to sell it. So this is a conundrum, and this is something, David, that a lot of investors don't believe in. I think the big surprise over the next 4 years is that Donald Trump actually gets a deal done with China and that the tensions actually reduce. They don't increase.
Well, okay. China aside, Trump has also pledged to end the war in Ukraine. He said he wants to make a deal with Putin. He wants to broker a deal between Ukraine and Putin. This is a divergence from the current policies of the Biden administration, which aims to end this war by forcing the Russians to lose. Right? They weren't really interested in brokering a negotiation. Otherwise, it probably would have happened already. So, two-part question. Suppose Trump could succeed. Do you think that a deal could be reached between the West and Putin? And number two, suppose this deal were to be concluded somehow, what would this do to assets like oil? Some speculate that oil went up this year because of a geopolitical risk premium. Would Trump be bearish for oil?
Well, first of all, I mean, oil did not go up at all since October 7th since the Hamas terrorist attack against Israel.
Okay.
So oil is actually struggling to reach its highs from end of 2023. Oil has not really done well. So I don't think there's any geopolitical risk premium. I think the resolution of conflict in Ukraine wouldn't do anything to oil. We all know that the Western sanctions against Russia were not really very robust. I mean, Russia continues to export pretty much the same amount of oil as it has pre-invasion of Ukraine. So I don't think that he's going to be definitely bullish for oil, and I don't know if he'll be bearish. One concern on oil front, Trump is not ideal. One place where I think we need to caveat that is the Middle East, particularly with Iran. Trump has traditionally surrounded himself with a lot of advisors who are very anti-Iran on a very sort of a, fundamentally normative level. And so I think that there is a risk that the U.S. Iran, forget Israel and Iran tensions clearly have no implications for the markets. I mean, the two countries have exchanged fire with missiles, and oil didn't so much as blink. However, U.S. Iran tensions are serious business, David, and so that's something where you could maybe look into Trump's contribution to a risk premium in oil prices. As for the deal with Ukraine and Russia, all I would say is that there can't be a deal. A lot of investors look at this from a very binary perspective, like peace, war. No, many conflicts don't end. They just peter out. North Korea and South Korea did not conclude a peace deal. They don't recognize each other. Nagorno-Karabakh, Azerbaijan never recognized Armenia's control of Nagorno-Karabakh, which is why in 2020 it reconquered it some 26 years after the conflict started. So there are many frozen conflicts in the world, and I don't think that Trump will get a deal. I don't think he'll get a peace deal. All he will do is probably reorient Kiev from offensive actions, which haven't worked, towards more economic development and rebuilding, which is kind of what Azerbaijan did for 26 years. and then use that economic development to reconquer its lost territories 2.5 decades later. I think that's the only option that Ukraine probably has.
Ultimately, then, so this is my ultimate question with the Ukraine war, and then when I want to move on to your macro views, what does Putin want at this point? So some have speculated that he doesn't just want to stop at Ukraine. He wants to eventually rebuild the Soviet Empire, start moving into Poland, start moving into the Baltic states, which, as you know, are NATO members. This is ultimately his objective long term. Do you have any evidence to refute this or support this?
No, I think that's all nonsense, quite frankly. I think Putin is trying to, what's his intention in Ukraine? His intention in Ukraine is to sustain power in Russia. That's it. It's that petty. There is no grand scheme. There is no grand plan. I mean, this idea that he can invade any other country, I mean, it's just objectively incorrect. He hasn't been able to invade Ukraine. It's kind of funny to me how people forget that he failed to conquer Kiev and Chernihiv in north of Ukraine before the West gave Ukrainians any weapons. By the way, other than javelins, other than the ability to attack tanks, the West did not give Ukraine air defense systems, did not give Ukraine fighter jet platforms or anything like that. Putin failed in attacking Ukraine and is now basically sequestered in the part of Ukraine that's the closest to Russia, that's the most pro-Russian. That's all he's got. So I think his designs are much pettier. I think Putin will be more than happy to freeze this conflict and start negotiations for ceasefire. And by the way, I believe him when he says that because he's been flagging that for the past 3 months, saying like, hey, we do want to negotiate. So he's looking for a way out. He's looking for the U.S. to give him, to dust off that mission accomplished banner, just dust it off from the closet and give it to him so he can hang it on his own aircraft carrier and proclaim victory.
In your book, Geopolitical Alpha, great book, by the way, I recommend people check it out, link down below, you wrote that the world is becoming more multipolar. Okay, so you said that in the past 25 years, geopolitics and politics have switched from being tailwinds to the global economy and markets to being headwinds. In the wake of the Great Recession, a messy multipolar world has replaced American hegemony. Okay, so in your analysis, you've outlined why this could be bad for global stability. Can you explain why, generally speaking, a one or two hegemonic powers is better for global stability than perhaps a multipolar world?
It's I've used in the past the analogy of a schoolyard full of kids. When there's one bully in the schoolyard, yes, occasionally someone gets beaten up, but it's a relatively peaceful schoolyard. Fights are not breaking out every way. There's only one big bully. If there's two bullies, they draw a line in the playground, and you don't cross that line. But for the most part, they police the two sides. When there is no bullies to keep the kids in check, fights are breaking out all the time. And so that is what multipolar system is. There's a higher frequency of conflict. And this is very well documented empirically in political science literature, and also formally, which means through game theory. The issue, though, is that while the frequency of conflict increases, it doesn't mean that every conflict is necessarily relevant. And I think that that's what's happened to us as investors. Investors are struggling to make sense of this environment because it does seem like 8 months, a significant war. However, because it's a multipolar system, a lot of these conflicts can actually remain quite well contained within their own regional dynamic. Not every war that breaks out on planet Earth today has to be grafted onto a superpower, US versus Soviet Union dynamic. And that actually means that they're less likely to produce global conflicts. They can remain well contained. So we see, for example, Israel essentially fighting against several of its neighbors. Mostly of them are terrorist organizations. So they're not sovereign countries, but, several sovereign countries are involved in supporting those terrorist organizations. So that's an example of a conflict that hasn't become global. It's remained quite contained. And then you have Ukraine, Russia, which has now been going on for 2.5 years, that has not spilled out over its borders. So a multipolar system both has a higher frequency of conflict, but it also means that not every conflict is necessarily as qualitatively important. And I think perhaps the market is becoming finally desensitized to this environment, David. Look at how commodities reacted after Russia-Ukraine war. They went up without any evidence that we would lose supply. But notice that after, again, as I said, after the Hamas terrorist attack, they didn't. It's almost as if the market has learned to kind of wait and see whether these conflicts are actually market relevant or not.
This is something that you talked about in your book, Investment Implications. You wrote, if something blows up geopolitically, just close your eyes and buy. I think if I'm interpreting that right, you mean just wait for the geopolitical risk premium to subside and then buy the dip. Is that still applicable?
Well, what I would say, David, is that is the foundation of my tactical investing strategy, not strategic, not long-term, not strategic asset allocation, but from a tactical perspective, yes. Although I wrote, I think, a little bit inelegantly in the book, it shouldn't be just close your eyes and buy it. It should be just close your eyes and fade. Sometimes you have a premium. You can sell that. And sometimes, yes, S&P 500 goes down and you should buy that. So the correct terminology is fade geopolitics in the short term. But in the long term, I would argue that geopolitics are the only determinant of asset allocation and asset returns over the longer period of time. It's really just about politics and geopolitics.
I think what investors would like to know is whether or not over the next couple of years we can expect, like you mentioned, in a more multipolar world, more geopolitical risk premiums to be factored into the market as global instability picks up. Is that something we can expect, Marko?
So I don't think, no, I would say no. I would say that geopolitics will be a factor of performance, both up and down, for a number of assets, for a number of regions, for a number of indices, for a number of countries, for a number of commodities. So in other words, instead of just looking at geopolitics and throwing our hands up and saying like, oh no, the world is falling apart, what I would say is that geopolitics becomes a macro factor. And that's why in my return at BCA Research, I'm publishing an investment strategy called GeoMacro that basically argues this point. Geopolitics is not good or bad. It just is. And you should take it seriously and you can use it to invest.
Well, let's finish off on your global macro view. So in your research service, GeoMacro, you actually cover the economy from a more macro perspective. Can you just summarize for us your outlook for U.S. growth right now, and then we can branch out from there?
Well, I mean, on a 6 to 12 month trajectory, politics and geopolitics are not going to change the market fundamentals. So the basis of GeoMacro, the basis of my strategy is that anything that's 6 to 12 months time horizon, you need to stick to market fundamentals. You need to fade politics and geopolitics. And in the case of the US, I think it's highly unlikely that politics can in any way, shape, or form really change the fact that the US growth is slowing down pretty significantly. There's the only way that politics can really impact that is if President Trump's probability of winning the election, as it's happening right now, and the GOP sweep comes into the forefront, and then investors have to price higher growth, which would cause bond yields to go higher. What's the problem with this? The perniciousness of this move is that when growth slows down, you want bond yields to come down. So it's a natural balancing mechanism. Growth slows down, borrowing costs come down. It allows you to nail the soft landing. If suddenly the long end of the curve starts going up against the market fundamentals, that means that borrowing costs for corporates and households will not come down as much as they should in a slowdown economy. So that could be a very negative outcome. So we need to watch the 10-year yield. If it starts getting ahead of itself above 4.5%, it's now at 4.2. We're recording this on July 15th.
Yeah.
But if it starts rising considerably, I don't think that's good for equities.
Okay.
But that's not interesting to me, David. What's interesting to me is more. Oh, sorry.
No. Sorry, I interrupted you. Please continue.
Yeah, what's really will impact strategic asset allocation. So if you're a longer term investor, if you're trying to catch some long term trends, that's where I think politics and geopolitics will have a pretty significant role to play. And I think what's happening in the world, I mean, we could talk another half an hour about this, but really what's happening is that we're pursuing a geopolitical trilemma. We're trying to de-risk from China. We're trying to solve climate change. And we're effectively destabilizing the largest commodity producer in the world, Russia. So those are three things we're trying to pursue at the same time. And I think we probably can only do 2 out of the 3, but we're going to do all 3. And what that means is that prices of commodities are going to have to stay elevated over the next 5 to 10 years. Well, maybe not 10. We'll see what happens over the 10 years, but at least for the rest of this decade. So what I would say is that if there is a growth slowdown over the next 6 months, if there's a recession in the US over the next 6 months, these will all be great opportunities for longer term investors to pick up some capex plays, to pick up commodities, some emerging markets. So I think over the next 6 months, we will have a great entry opportunity for that longer term view.
How aggressive or not aggressive do you think the Federal Reserve will be in their cutting of rates in the next cutting cycle, whenever that will begin? The markets, the CME Fed Watch tool last I checked, priced in a nearly 90% chance of a cut by September. What's your view on this situation?
Well, I think there's two parts of that question. One is, will they cut in September? I'm not really that interested about that. I think too many of us are overly focused on like whether the Fed cuts in July or September or November. But sure, yes, I do think they will cut. The bigger question is what you said, which is that how aggressively will they cut in the next recession? How aggressively will they cut? And I think they will cut aggressively. They will cut by more than 250 basis points in the next recession, because I think the fiscal tool will be not unavailable, but I don't see political system and political authorities, whether it's Donald Trump or Joe Biden, being able to do what they did in 2020 and 21. And so the heavy lifting will be left to the Fed, and they'll cut interest rates. So why is this important? It's important because it will simply reset. It'll be like turning off the light and turning it back on the cycle. This high growth, high nominal GDP growth, high inflation, high commodity prices cycle that we're in will not end with a recession. Once the Fed cuts those interest rates, American households will leverage themselves in a way they haven't over the last 4 years. They've actually not leveraged themselves. They've been spending cash. But I think that there's plenty of gunpowder on the household balance sheets, particularly in the form of home equity that they have gained over the last 4 years. Once interest rates come down, I think you will see considerable leveraging by U.S. households.
Okay. And finally, with the short end of the curve, 2-year expected to fall with the Fed cut, does this signal to you any capital rotation out of equities into bonds, perhaps, or no change for you?
Well, no. I mean, I think if the growth slows down significantly, then yes, there would be. That is just market fundamentals. Over the next 6 months, if we start getting closer to a recession, there will be a vicious rotation out of equities into bonds. So that's a standard risk of a recession. That's not something, monumental. I think the bigger question again is, once they cut, what happens then? And my view would be that investors have to be very, very nimble. If there is a recession, the Fed cuts, you should expect a vicious steepening, both bull and bear, because on the front end, they'll cut. On the far end, I think the long end of the curve will start to price in the fact that U.S. households are more than willing to leverage, and that we will be back into the high growth environment that we've been in. And so this might be a recession that actually, causes the most vicious steepening like in history. And it could be the first recession where, housing activity and real estate activity actually picks up in the recession, because all that people are waiting for are those interest rates to come down so that they can start leveraging themselves. And so that should be, I think, the main takeaway. If they do start cutting rates significantly, it will be because there's a recession, and that will allow households to actually start leveraging.
Great. Well, I could talk to you for hours, but plenty to follow up with you on next time, including the geopolitical trilemma and what you just talked about in regards to the housing market. So thank you. We'll leave it here. Very informative. Where can we learn more from you and your new service? Congratulations on your new service. Where can we follow that?
BCAresearch.com, and you can just hit me up on LinkedIn if you're interested.
Okay, we'll put the links down below. Thank you very much, Marko. Good luck again, and we'll speak soon.
Thank you, David.
And thank you for watching. Don't forget to like and subscribe.